The stock market has been experiencing some ups and downs. This is called volatility. In the past week, major stock market indices have gone down. The S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite all fell. The S&P 500 dropped 3.1%. The Dow Jones went down by 2.4%. The Nasdaq had the biggest drop of 3.5%. Why did this happen? One reason is the tariffs. These are taxes on goods from other countries. Former President Trump put tariffs on goods from Canada, Mexico, and China. This has made investors worried about the economy. When investors worry, they sometimes sell their stocks. This can cause the market to go down. The CBOE Volatility Index, or VIX, measures how volatile the market is. A high VIX means the market is moving up and down a lot. Right now the VIX is at 26. This is high, but it is not a panic level. What will happen to the stock market next? Experts have different opinions. Some experts think the market will go down in the short term. They are worried about the trade negotiations and the economy. They think investors need more information before they will buy stocks again. Some even think the government might shut down on March 14th. However, some experts think the market will go up in the short term. One expert thinks the market could go up by 10 to 15% in the next few months. He thinks the economy is still strong and that the market is oversold. Economic indicators are pieces of information about the economy. They can help us understand how the economy is doing. Some economic indicators are pointing to a slowdown in the economy. For example, the Atlanta Fed GDP now is a measure of how fast the economy is growing. Right now, it suggests that the economy will shrink in the first quarter of 2025. Another indicator is the number of layoffs. Layoffs are when companies let go of workers. Layoff announcements are at their highest level since 2020. This suggests that companies are worried about the economy. Inflation is another important factor to consider. Inflation is when prices go up. The Consumer Price Index, or CPI, measures how much prices have gone up for consumers. Experts expect the CPI to rise by 2.9% in the next year. This means that prices are expected to continue to rise, but at a slightly slower pace than before. So what should investors do? Experts have different opinions. Some experts recommend investing in value stocks. These are stocks that are considered to be undervalued by the market. Others recommend investing in small-cap stocks. These are stocks of smaller companies. Many experts are worried about the impact of tariffs. Tariffs can hurt companies that sell goods to other countries. They can also hurt companies that use imported goods to make their products. Some experts recommend being cautious about investing in certain sectors of the economy, such as the auto industry and the retail industry. Other experts recommend diversifying your portfolio. This means investing in a variety of different assets, such as stocks, bonds, and real estate. This can help reduce your risk if one particular asset class does poorly. Some experts even recommend investing in gold, which is often seen as a safe haven asset during times of economic uncertainty. The most important thing is to stay informed and to be cautious. These are uncertain times for the economy and the stock market. Make sure you understand the risks before you invest.